Good, and welcome to this practice assessment on St Anne's Basketball Club. I'm going to go pretty fast because we've got to get through in 15 minutes, but you can press pause, go back and do it in your own time as well. First thing we need to do is do the additional information, which is the stuff down the bottom, making sure we keep our trial balance balancing. At the moment, 47,400. First one is a sausage sizzle inventory balance on the end of the time. So we'll put sausage sizzle. And because it's the end of the year, it's the 31st, 12, and that figure's $20. This is an asset because it's left over at the end. It's also a negative cost of goods sold, so we're going to have it on both sides, and you'll see $20 on both sides, so we balance here. Second thing, coaching fees owing. Something owing is a liability, and it's an expense owing. So it's called accrued. Make sure you spell accrued, R-U-E-D, expense. And we owe $200, so that's a liability. And what do we owe that for? Coaching fees. So we're going to add that to the coaching fees. Add that 200 there. $90 members fees. 5 if paid in advance. So it's called subscriptions in advance. Five members. 90 times 5. And in advance, always in advance, you stay on the same side. So the subscriptions figure, we're going to minus that in advance because it belongs to next year, not this year. Still balanced, good. 2 members are owing. So this is subscriptions. What was the word for owing? And that's 2 members at $90. So they're actually part of this year's sub, so we're going to add them on. Plus that 180, good. Still balanced, still balanced. 5,000 of coaching fees is reclassified as a tournament expense. So we'll call it tournament coaching. And we're going to take it out of the coaching fees here. So just reclassifying it. Obviously the coach worked at the tournament and therefore a tournament cost. Depreciation. We've got equipment, barbecue and uniform depreciation. I'm going to have to add another line. So equipment, barbecue, and uniform. So depreciation is basically we don't call it depreciation, not depreciations. Basically it's the amount that we write off because things are getting old. So the equipment depreciation is 25% multiplied by the equipment. When we add it to the depreciation, we also add it to the accumulated depreciation. So it's gone down by 1,050 over the time we've had it. The barbecue depreciation, it tells us that it's 25% as well. Just on the barbecue. And we're going to add that 300 up to here. And the last one, the uniform depreciation, that one is just 40%, a bit higher. Multiply that by the uniform cost. And that will be added to accumulated depreciation then. All right, so that's the first step. We all balance, and the depreciation for that barbecue is on the sausage sizzle. Good. So the next thing we're going to do is we're going to colour them in. So I've got the sausage sizzle yellow tournament. Anything to do with that is gold, green, red, and blue. So first of all, sausage sizzle. Anything to do with the sausage sizzle, we're going to put in yellow. So we've got other sausage sizzle expenses. Let's click on them. Hold the control key down. Purchases. The only one that's not done is that one there. That's an asset, so we're not going to bring it in. And the sausage sizzle inventory at the end we'll put here. So all of those, we'll just colour those in yellow. Tournament ones, we're going to put the tournament in as gold. So again, if you hold the control key down after you've clicked the first one. And we've got the coach, remember, as well. And we've got some money coming in from the tournament. We're going to make those ones gold. The property, plant and equipment, probably the next easy ones to do. So just highlight the 3 accumulated depreciation with the barbecue, the equipment, and the uniforms. The expenses are going to be green. Not that one. Not so many of them. And the income also is green. And last one's a red. So assets on the side. And we've got liabilities and equity on that side. So let's go. We've got sausage sizzle activity. Just that's a sausage sizzle there. Sausage sizzle sales. And then we go less cost of goods sold. So that's what we've got at the start, the inventory at the start, plus the purchases. And that adds up to, I'll just do it. Sorry, that looks better on a wide screen. So we've got the sausage sizzle sales plus the inventory plus the purchases, and we're going to add those two up. And that'll give us the goods available for sale. Then we're going to less at the end of the year, the inventory at the end, because we haven't sold it. And that one there actually gives us our cost of goods sold, what we had available to sell, minus what we didn't sell. So the difference between our sales and our purchase price is our gross surplus, and less our expenses for the sausage sizzle. That's the other, and the barbecue depreciation. Let's fill that across. And that's only 700, so it looks like we made a sausage so our gross surplus minus our expenses is a sausage sizzle surplus, which will end up going in the income. Equal to the tournament. So the green one, sorry, the gold one's got a tournament charge, and we charge those going on tournament 11,000 less tournament expenses. And these are all our gold ones over here. The idea of this is to find out how much we gain, in this case probably lost on the tournament. And you see it was quite expensive. So that led to a tournament deficit. All right, now the income statement itself. So putting all the income, start off with that sausage sizzle surplus. and then we're after all the green ones. Let's say income. And just get a total income there by adding all of those together. Less expenses. And again, you're after all the green ones. One not to forget is that tournament deficit. Now it's negative figure. We don't want a negative figure, so call it equals negative. But overall, we made a slight surplus for the year, which is good. Next is the blue bit, and that's your property, plant, and equipment. So we've got, remember, 3 of those. We've got the equipment, the barbecue, and the uniform. Just bring that in. Better spell equipment right. The equipment, the opening value of that. The barbecue, the opening value of that is 1,200. And the last one, uniform, 4,000. They were new this year. The accumulated depreciation, I like to put equals negative. That way I can just add across. The barbecue is at 600 is the total. And then the uniform, negative 600. And just auto sum these, fill across. And fill down as well. All right, so now we've got to do the red ones. So we're after assets first. So these are all the red ones. I'll start with bank. And the last one is property, plant, and equipment. And that's from note 1. That's that figure down the bottom. We can click on it. And that'll give us total assets. Then we're going to take away our liabilities. And again, the green one, sorry, the red ones, just got 2. And we'll just fill those across. And total liabilities. Don't see any debentures this time. Normally there is. Okay, total your liabilities up. Take them away from your assets. And this gives us our last part called accumulated fund. And we've got an opening balance plus our surplus, and gives us a closing balance. And this is when we know we're right or not. So opening balance, accumulated fund. We made a surplus of 1,900. We add those 2 together. And because this figure and this figure balances, that's excellent. Thank you very much. Right, the next short video will be on the receipts and payments. Make sure you've got that one right. And I want you to analyse that because that's the next part of writing the report. Ka kite, thank you, good luck.